Okay. Good morning, everyone. New day, fresh start. It is. Okay. Hey, good morning, everyone. It's Wednesday, May 20th, 2026. New day, fresh start. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. Purpose of the show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with a focus on building real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with the same goal: to build out the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, team. Cloudy mic. Okay, let me double check that. Found check. Yeah, let me just hang on a second. Cloudy mic. Okay. Hang Yep, hang on. I think he's right. Hang tight. How's this? Please tell me that's better. Excellent. Thank you. Thanks for that, Delphine. Large Void, how's the mic now? All right, let's wait for Large Void to answer and making sure that he can hear me. I did have I was using the wrong mic. I did have the wrong mic configured. So no surprises there. All right, team. Let's map it out. Let's get right into it. All right, we're going to start off with we do every morning. Sorry about that, Large Void. You should be good now. Okay, so we're going to map it out as we do every morning. We're going to start off with our higher time frame analysis. And interestingly enough, right, so we have, our 4-hour time frame here on the left. And let's just map out a couple of scenarios. Quick programming note, team. Starting next week, I'll be able to go on about 15 minutes earlier. I won't have this. I have to drop my kids off prior to running this stream, and I'm going to have that kind of shifting schedules around the Manny household so that I can get on earlier, because frequently during the morning there's a little. I want to get a little bit more into the weeds with the higher time frame, and I also want to be able to review what we said yesterday, because review is so important. We're traders, pattern recognition, reviewing what we said, how we traded it is going to be so important to us educating ourselves, getting better at what we do. And so I'm going to add more value in that aspect. So stay tuned for that. That's going to be on Monday. But anyhow, let's get right into it, right? 4-hour time frame. And on the 4-hour time frame, we still have this gray rectangle that's highlighted here. Okay. And the reason why that's highlighted is because that represents the May 6th gap, when price gapped up over 7,300. Okay. And the reason why that is important is because we've been in this solid uptrend. Okay. Nothing but, there have been no pullbacks. We had a sideways pullback here. Maybe this is not a pullback. We've had consolidations, more pullbacks in time rather than price pulling back. When we're looking at the 4-hour time frame, I don't consider this a pullback. That's just a micro inventory reset. These are not pullbacks. And now we're currently here sitting down about 1.5%, maybe 2% from the high to the low to the bottom. This is the first time that we can honestly look at and say, okay, we're under a pullback. Obviously every bear in the world is going to think, the top is in, the top is in. Not us. We're going to stick to the process. We're going to make sure that we have good evidence, and we're going to build out our train and our analysis based on a logic chain. So we're trading the day with the idea, and one with the market, and with the idea of using an evidence-based approach. All right. So currently, as you can see here on the 4-hour time frame, we are moving sideways, right? And I'd say that if we can get down here into 7,300, test the gap, right? That's going to be the first time that we're going to see an hourly pullback since the March 30th 63.53 low. All right. So let's just keep that on our radar because, one of the ways it could materialize, just let me see, grab this. There are a few different scenarios in how this can play out, and any scenario, we have to remain open-minded. But there are we can try to map out what we think would happen. And so coming into this, right, well, we could get down into this gap, right? And say we go into the gap fill, we look below and we fail. And when we start putting in higher lows and we start moving higher, okay? That would be in line. That would be an first hourly pullback. Bulls were there. They bought it up. And then we can start looking towards higher prices. Or if we come down, if we trade lower and we get below there, right, and start unable to reclaim the gap, maybe even test a little bit higher, and then ultimately put in a lower high, at that point, we'd have to think, okay, this is going to be more than just a standard hourly pullback. Now we're looking at a full higher time frame retracement. And then again, we'll map out the scenarios when we get there. But I just kind of wanted to go over those higher time frame scenarios to have them as part of our narrative and put them in the back of our mind. All right, so let's dig in. Let's get a little bit more granular with it. Let's start looking at the 15-minute chart, and we'll stick to the process. We're going to map out the most bullish argument. We're going to map out the most bearish argument. Then we're going to talk about the bullish trap trade, and then following that, we'll talk about the bearish trap trade. All right, so to do that, we're going to go to our 15-minute time frame. Let's make sure we have a good, consistent chart presentation here. All right. All right, we're looking at the 15-minute chart. 15-minute chart on the left, 15-minute chart on the right. And the reason why we do that is because trading is so visual. We want to be able to see both scenarios and keep those in our mind. And so light gray area would represent the overnight trade, where the dark gray area represents the regular trading hours. All right, so digging into it, let's talk about the most bullish argument. Okay, so obviously, overnight here, we're gapping up 21 points. We're trading above the settlement. Yesterday's settlement was 73.78. We had that midday high, and then we sold off into the afternoon. Okay, so say we're opening at 74.01, and immediately we get an open drive type look. And immediately what we're going to do is our references, our day time frame references that we use every day to kind of build out the structure, is the overnight high and the yesterday's high, which are both about 1 point apart. So that's an excellent, excellent structure right there for us to be able to use that as a kind of a fulcrum on if we're going to be bullish or bearish. So if we get over the overnight high, get over yesterday's high, and on pullbacks, price, we get over it and price demonstrates acceptance, right? If we get a few closes there, and then say a couple of, 15, 20 minutes later, we're pulling back and we test those levels. Say we even go test a little, we get back into yesterday's range. Say we test down to 74.12 or 74, even 74, let's call it 74.05 to 74.10. At that point, we're still going to start looking for sellers to be absorbed. We're going to start looking for long entries that get us back over. Well, obviously, we're going to be taking our scales along the way, but let's watch for a pullback, and then we'll assess where this local high was made, and we'll look to that as being our first target zone on our runners. And so let's just be mindful of that. Opening drive, we get a look, we get over the overnight high, 74.16, 74.25, 74.15 being yesterday's high. Okay, and same scenario can play out. Say we test it and we don't breach it, but we pull back. Same scenario. So we'd be pulling back from here. The downside reference is going to be that 74.05 to 74.10 band that starts right about here. Okay. And we're going to look for that to hold. If that holds, then we're going to be looking for long entries. We're going to look for entries on close to our exit, as close as possible with an acceptable risk. And we're going to be taking our scales along the way. So that would be the most bullish argument. Let's make sure that we have the overnight high, 74.16, yesterday's high, 74.15, on our charts. Make sure we have those references mapped out. All right, so let's talk about the most bearish. Let's talk about the most bearish outcome. All right, so say we're opening here, and we've seen this before, right? Yesterday was a really volatile open. I don't think we're going to see a repeat of that. Say we get an open here where the price just has a liquidation break. Immediately, our first point of reference is going to be, okay, and now value area high for yesterday comes in at 73.94. And what value area high represents is where 70% of yesterday's volume occurred, and that's a band, right? So we all know that's where 70% of the prior day's volume happened, and that's value area high comes in at 73.94. Value area low is 73.64. So if we open bearish and price begins to sell off, that's going to be our first point of reference, 73.94. If we get below value area high and price demonstrates that it's accepting within the prior day's value, a market profile rule of thumb is that if you trade in value and price is accepted within value, then what you get is typically a test of the opposite end of value. Okay, so at that point, what we're going to start doing is on any pullbacks or any retracements, we're going to frame out this lower structure here that comes in at about 7,400. Okay, and at 7,400, what we're going to start looking for is that to act as resistance. If 7,400 acts as resistance, then we're looking at short entries to get back into value, maybe test down to the settlement 73.78 for a true gap fill, and then maybe we can get those runners down even to yesterday's value area low and maybe even yesterday's low. All right, so that's the most bullish argument. That's the most bearish argument. Let's be on alert for either or. I don't think we're going to have a volatile open as we did yesterday, but we have to be ready for anything to happen. All right, team, let's map out the bullish trap trade. So say we're opening 74.01 and price rallies and it gets up to yesterday's high, 74.15, 74.16. And in this zone above 74, let's see what is this high, 74, let's call it 74.10 to 74.15, a 5-point band, we start to see price peter out and lose momentum. Say we even look above the overnight high or yesterday's high being 74.15, 74.16, and then immediately price retraces and starts trading back within the overnight range. If price comes back within the overnight range, at that point, we're going to be on alert for that trap trade. We're going to be looking for short entries with our risk marker being yesterday's high and the overnight high and these local highs here. We're going to start looking for short trades that get us in close to our exit, and we're going to be looking for a move down to value area high 73.94. Okay, all right, so that covers the bullish trap trade, the look above and fail. Let's talk about the bearish trap trade. For that, we're going to move over to the right-hand chart. We're opening 7,400 and say price sells off pretty hard. And there's a few different ways this could materialize, and let's just talk about them. So if say we are opening here 7,400 and we get that liquidation break right into value area and say price gets rejected from value area, we start putting in a higher low. At that point, you know what we're doing? We're looking for long entries. We're going to take those scales along the way, but ultimately what we're targeting is the overnight high to satisfy the 96% statistic. And also that same scenario could materialize from a few different areas. Okay, so if price gets down to the settlement, we know that this is a nuance that most experienced traders know, that when price tests the settlement, it tends to bounce. You know, whether that bounce is 1 point, 5 points, or 10 points, That's the true measure. That's what gives us an idea of the context, right? So if we get down to settlement and price has a 5-point bounce, goes back below it, but ultimately runs out of steam, meaning that it starts consolidating. At that point, we're going to start thinking, okay, this could be a trap. We're going to start waiting for price to reclaim the settlement at 73.78. If it does reclaim the settlement, okay, we're looking for long entries that get us in. At that point, we're going to be targeting value area high at 73.94. We can also draw a trend line on whatever structure that is forms there, and we can get long on the break of that using our risk marker being the settlement and the local low that was put in prior to the higher low. That same scenario can materialize below yesterday's low. So we have a good stack down here. Yesterday's low is 73.54. If we get down to yesterday's low and we form out the same pattern, right, get a little bit lower, maybe have that inverted head and shoulders look, but ultimately come right back in, reclaim yesterday's low at 73.54. At that point, what we're looking for, we're looking for long entries that get us back into value for a test up to the settlement. Okay. All right, so that covers the bullish trap trade, a few different scenarios on how the bearish trap trade can play out. One last thought before we go is in the case we do get below 73.50, okay, we know that because we covered it on our higher time frame analysis, we know that below 73.50, if price is selling down there, we know we have a gap fill right at 7,300. The top of the gap is 73.25. The low of the gap is 7,300 on any rate, possibly 73.50 with strength and momentum. We want to go for a reach of that gap. All right. So that covers those scenarios. Let's get our opening print mapped out and we'll start today. Let me know if you have any questions. If you do, post them in the chat. All right. Let me clear this out. I didn't have the exact overnight low here mapped out, so I want to make sure I get that in. 73.56 is the overnight low, which lines up really, really well with the overnight low, with yesterday's low. All right, I want to get my higher time frame up. I want to be aware in case we get below 73.50. I want to know where that gap fill is. I want to have that on my radar. Also, I want to map out. I want to make sure that I have today's daily open. Okay, so guys, I don't think that we're going to see the volatility that we had yesterday, and there's a reason for that. 73.95 is our open print. Make sure you have that written down somewhere on your chart or somewhere in your journal. So yeah, So look, the opening print lines up really well with value, and we're going down there. We're testing that now. All right, let me get my trading charts right. Make sure that these are all properly configured. I don't think that we're going to see an expansion of volatility at today's open. From what I can discern and what I can read from the overnight range and the overnight trade is that the volatility is more than likely is going to be suppressed today. And the reason for that is that is one of the options group Vega, where trade SPX is really the tail that wags the dog, and it's really in an area where you can tell that it's going to be there's going to be lower volatility here. But let's watch what happens immediately. Team, we're getting back into value. Okay, we're back into value here, so heads up. All right, we're coming down to VWAP, volume weighted average price. We're testing that out. Let's watch what happens here. Yep. It's kind of quiet out there. What are you guys thinking? Are you all managing trades right now? What do you have going on? Let me know. System is very laggy this morning. Let's get a quick look at the internals. We are 1-to-1 positive on the NYSE, 1.4 to 1 positive on the Nasdaq. The VIX is flat. So that lines up well with what I mentioned earlier. I think we're going to see a suppression of volatility today. I don't think that we're going to have that expansion of volume. Although, as I say that, price is really dipping pretty aggressively here. Pretty aggressive. And I'm just bouncing around here, making sure that I have my my algorithms right. Kind of a slow morning this morning. I'm pretty sure that David's going to be joining us today at some point. So look out for that. So we're dipping lower here. Watch one eye on the tick because the tick is pretty flat. Okay. But we are seeing that overnight inventory liquidation break. So nothing new here. I don't think this is anything very meaningful, but we have our references, right? Okay. We have our references. There's a pre-planned setup off of the market blueprint at this level. And if you're following that, you can if you want to know more about that, you can go to my X feed and catch some there. All right. So this algorithm just got me short 73.89. Let me make sure I have the right, account number here. So it got me short here at 73.89. I've got one target. I got two targets out, plus 3 points, plus 5 points. Stops at break even. The stop is now at break even. And I'm looking for a 73.79 target with the stop at break even. I might extend that target depending on the order flow here. Again, and that's also, just as a heads up, that's also following, the logic that we're looking for. I'm following the clock as well. So just a heads up on that. Heads up. All right, just got taken out of that. So I got two targets on that. I got plus 3 points. I got plus 5 points. And then the final target was a break even. At Rock and Rufus, my handle is at Manny_trends. At Manny_trends on X. Where you joining us from, Rock and Rufus? Where are you coming in from? Hi, Live Action. Good morning. Thanks for joining us. Back to the huge area of cells. Yeah, well, let's see what happens here, right? So this was our liquidation break area right here at this 73.95. Let's call it 73.95 to 7,400. It's really 73.99. Let's just watch it here. Oh, I see I'm being joined by David. Good morning, David. I just saw you tune in. Good morning, Oz. Welcome. Oz joining us from Toronto. Thanks for joining us, Oz. Appreciate the company. We're mapping it out today. We're going to try to stay on the right side, stay on the dominant side of the dominant forces of the day, as we do every day. I had one trade here that went short 73.89. I got 3 points. I got a 5-point scale out of it, and then the final contract broke even. Sounds like David is with us now. Oz asks, Manny, do you trade ES or MES? Oz, I trade both. So interestingly, a good question, great question, Oz. So I trade both. There are times that I'm trading ES solely, and there are times that I'm trading MES. And that's largely a decision that I make coming into the day. So for instance, if I come into the day and I feel that oh, okay, wait, sorry, I had this trade. I missed it, man. Dang it. So much going on here. Sorry, Oz. Let me just, because I'm a trader first, let me just make sure I'm managing these positions. I have, you can see this trade executed here for me, and I have to make sure that I don't have them trading in opposite directions. That's no bueno. Good morning, good morning, Befuglestrom. Did I get that right? BF Ugelstrom. Thanks for joining us. So Oz, to answer your question, I trade both. I trade ES and I trade MES, and that's largely a function of how I feel about the risk and how I feel about the setup. So if you're just obviously you're just joining us, I oscillate between both. Sometimes I'm trading MES. I don't. So case in point, last Thursday I traded MES solely, and it was a great day. It was a great day for my strategy, and I regretted it at the end of the day. But in the morning coming in, I pulled back on it because I had a good day on. I had a great day on Wednesday, and I didn't want to risk it. So yeah, that's just a heads up on that. Oh, I missed a great trade here. Very frustrated about that. I've got to get better about this. So I had this. So I had the setup number one, and then I didn't take it because this algorithm had me short, and I was paying attention to this, and also trying to pay attention to what I was talking about. So I missed the setup number one from the market blueprint. I hope some of you guys caught it. The market blueprint is extremely accurate. I highly suggest you check it out. At least write the levels down. So I missed that. Paying attention to this short. So luckily I did get this long here at 73.84, and I got the the four scales out of it. So I'm happy about that, but I'm not happy that I missed this long trade here. Dang it. That's very frustrating. Oh boy. That really sucked. I got the one trade. I got the one long in that one, but all right, back to the tape. All right, got me long here at 74.02. All right, so on the left hand, on the right hand chart, man, I can't. I've got to pay better attention. Yeah, Sandeep says I would love to see us trend from here all day up. That would be nice. Sure, why not? Look at this one. This one's probably not going to work out here. Yeah. We'll see what happens. Regardless of this, of the outcome of this trade, though, I'm going into stop loss protocol after this. I'm just going to, I'll hand the mic over to David. I'll let David talk for a little bit. Oh, I didn't even know he was in. I'm not sure if he's in here yet. We got to get this together because I don't know when he's talking and when he's not.
Yeah, hey, good morning, Manny.
Hey, David, how's it going?
I'm here listening to you. I didn't want to overspeak you. Morning, everyone. Hope you're doing okay.
Uh,
Manny's been guiding you folks quite well lately, so keep up the good work there, Manny. What I'm doing here is I'm posting everything that we're doing, on the other side here in our room on the PTG side of the equation. You'll see our charts listed as part of the display over there in the pit room. All right. Morning, Delphine. Sandeep. Easy money. Show me the money. Large void. How'd you come up with that short name? What does the large void stand for? Something in particular? Interesting name. It wasn't. Oh, okay. It was an existential crisis in your 20s. There's usually a meaning behind a lot of this stuff, but people use, various names and acronyms and whatnot. Well, I hope you survived your existential crisis. What we've done on our side here, just I mean, you probably see it on the screen there. I'm not going to just rehash everything, but what we were looking for um, off the initial opening was a pullback, which we ended up getting down towards the uh, kind of the midpoint of the overnight session. The 50% point of any range for us is typically um, potentially an actionable zone, and that kind of corresponded very nicely with the VWAP, 24-hour VWAP, and what we refer to as our A10 or our ATR level that we look for. So the prices did pull right into that zone, and as you can see on the screen, got a trigger. Okay, and again through our algorithm, helped us manage the trade uh, quite effectively. We didn't get the full runner high. We did the you saw that deep pullback, but we have a stop trail protocol in place on that, and that did get elected. So all in all, it was a solid trade. So from our purposes here, we're still looking playing the long side or long bias at this stage. I don't think there's any reason, given the current patterns, to be looking for short plays at the moment. So we will maintain a long play. Um, referencing that midpoint pullback area. Okay, so that's going to be 80s, 85s. All right, so what we end up doing is we end up marking that zone as a key reference zone for any further pullbacks, and we'll be anticipating that zone to continue to respond on the buy side. But should it fail to respond on a subsequent test, again, then that would open potentially for a lower probe, and in the next level, we would be looking for it to probe. If that were to happen, would be down towards the prior close, 72s. So we just kind of take it one step at a time, one decision point at a time, not trying to overthink, what's more likely to happen, but we want to stay in alignment, with the current lean. And another thing we also do, for the folks in the pit room that are new visiting, I like to frame out, a kind of an ongoing frame out of what we would refer to as a sandbox. So everybody kind of knows the idea of a sandbox, right? Kids sandbox, the playground, right? So that's kind of the idea and in this case, what we can always use from our perspective as a default sandbox is the developing value high, value low. So they can always use that as a default. And then from that point on, we tend to kind of refine, the area, the playground, so to speak, a little bit more as, price unfolds. But the idea there here at the moment, so like I said earlier, prices come down to, 80, 85 zone. We're looking for a buy response in this area, up towards the high there of the range. Currently, we'd be looking for some sort of a sell response. Okay, so the idea would be outside in, meaning down to the low area and then revert back in, or up into the high area, revert back in. So outside in, until, if and when either of those edges clears, right? And we call that a clear and convert, CNC. Clear and convert that area. So in other words, clear above it, any pullbacks, hold it, and then we look for a continuation. That's kind of the two kind of scenarios that typically ongoing throughout the day. You're either in a range type environment, back and forth, balancing, or you're in a breakout kind of trend type, dynamic. So those are the two that we're currently always kind of measuring out, what's the current sandbox and where is price relative to the upper and lower edges of that sandbox. Again, these are the terms that we use here at, in the PTG community, and try to make it interesting. I mean, trading terminology can be, pretty dry. Just try to make it a little bit interesting. Refer to, support or resistance, and kind of we use construction terms at times. Lolly columns for support, kind of holding this, the next level, etc. So we kind of use all these, different terms. Try to make it a little bit interesting, because as we all know, trading can be pretty dry. But anyway, sandbox, that's the idea. And then, once we have an upper and lower edge identified, the next level is simply the midpoint of that range. So where is price relative to, the midpoint? Is it in the lower part of that range? Is it the upper part of that range? And that can help us kind of determine, the forces that are ongoing, right? So that's kind of how we view it throughout the day. Uh, that kind of approach doesn't really change. Again, we always are trying to frame out the market as early as we can to determine whether or not we have more likely range parameters or range dynamic versus trend. And then from that point on, once we have that somewhat established in our um, observation, and our orientation, then we're going to be looking for types of trades that um, are congruent to that type of view of price action. That's a kind of a quick synopsis of how we look at things, and then yeah, and then when price reaches certain points, like it did this morning, we were looking for that early pullback off the Globex rally, and then we were looking for that midpoint area to hold, which, as you can see, did, and we ended up getting a trade out of it. So at this point, we're neutral long bias, but as you can see here, everything is kind of flattened out. So yeah, we're just going to be holding on, waiting for kind of the next formation. So there it is. uh, Let me know if anybody has questions, comments. I'd be happy to field any questions, comments, as we move along.
Yeah, David. So I just had to. Fu- Funny enough, it's what is it? It's like 10 to 10, and I had to take a stop loss protocol. I had to step away. So thanks for covering for me on that. Um,
Oh, okay.
I just got.
So what
I
do you?
just.
So what is it that you do with these stop loss protocol? What do you
I
actually
just
step
I
away?
step away. I'm supposed to. So technically, I'm supposed to step away for 10 minutes, right? But it's a little bit harder because you can't really leave a live stream by itself for 10 minutes.
Oh,
But
okay.
I just stepped away, and so right now, like I literally just stepped out,
Mm.
right, and I went outside to the front door, and I have this thing. I'm like, damn, life is good. I'm not gonna. It's too early in the day. I feel super blessed. I'm healthy. My kids are thriving. Like get back in. All right, so I just got that first target on that short. Heads up, plus 5 points on the 73.98 short. I'm looking for 73.78. So back to what I was saying. So and thanks for that. Appreciate the support. So yeah, so it was really early in the day, and here's what got me right. Here's what triggered me, guys, folks, live and direct. Sorry. Let me see. Anna said, "Sorry, man, I was not glued to you then in the trade. So sorry you missed yours." Yeah. So did you take it? I hope you got it, Anna. So that's gonna Anna, and that's gonna speak to. I'm sorry, I'm talking to Anna. She's checking in on YouTube. So what got me right here's I'll just let me just walk. Let me just. I think this is a great point. Something good to go over right now. Right. Let's just get it up here. Hang on 1 second. I'm going to pull up the visual of today's market blueprint. Um, all right. So here's the thing, right? All right. So David, I take a lot of time out to draft my plan. It takes me about 2.5 hours, 3 hours every morning, right? And so I had this setup right here. Wait, is this right? Yeah. So right here, right, 73.78, setup number two, 73.78 to 73.82 support. And it's like a victory for me when we traded down here to 73.80. I had the level, I had it, right? And I missed buying it because I was in an A4 short. And so I just got distracted. And then by the time I turned around, we were trading 73.88. So all right,
Yeah.
fine, no big deal, right? The A4 short gave me +3, +5. Happy about that. Missed the trade, but I got a trade. I also got the A10 that you guys had. Okay,
Right.
wait a minute, which is in another one right now.
Yeah, I see that.
And so what I got upset of what really got me under the collar was that I was I that I was distracted, right? I wasn't paying attention well enough to manage my trades. And just because I went through that last night with myself, like, hey, listen, if you're gonna do this, you got to put your big boy pants on. You have to you have to. I'm going to get out of the 810 short, guys. Heads up. Let me just handle my business here. It's working. It's so hard to get out of a trade that's working. So what got me upset about that was that I didn't manage it well, right? I knew that I wanted to be long, and I wanted to have the algorithms trading me in that direction, right? So with the A10, I got the A10 long also, just like you guys did, right? And so, but the one trade I was focusing on was the 3 and 5 point gain. Meanwhile, this A10 long right back here, guys. Look, this is a beautiful trade. Look at this. What look at all these scales it got. 2, 3, 4. Like that's the trade I wanted to be in. I didn't really want to be in the short. My plan said to buy that dip. So I got upset with myself because I was distracted. But no harm, no foul. I'm back in it. It's so early in the day. The P&L is looking frothy. It's okay. There's nothing really to get too upset about here.
Yeah, I like
So
your.
he's
I
got.
like. I was
Sorry,
just
sorry.
gonna say, excuse me. I was just gonna say I like your stop loss protocol idea, right? So you plan your trade, and uh, the idea of that stop loss protocol is gives you kind of just a quick little timeout, so you don't kind of get blow a gasket, as I always like to say, blowing a gasket, because I got upset because I got uh, stopped out on something or whatever. It's like, okay, that's you know stop outs are part of, should be anyways, for everybody's plans, should be part of the normal expectation, of a trade, right? So I mean, stop losses are part of profitable systems, and so you have to respect them, and not blow a gasket out of them. But if it requires you to, if it requires you to kind of step away for a few minutes, yeah, definitely do that. So and that's for everybody, not just Spanny, but take Spanny's lead on that, and have some sort of a stop loss protocol and say, okay, stopped out, whatever, okay, quick timeout, and let me get back. And if you have to go outside and yell, go outside and yell. Get it off your system. You
Yeah,
know,
and
move
so yeah, and that's the thing. Like, so good point, David. Just to your point earlier about trading and stop losses, right? If that kind of protocol for me was derived from, hey, you know what? Like, I realized that I was planning for. I had a plan for all the good times, but I didn't have a plan for when the shit hits the fan, right? And so what with stop loss protocol, really what it does is allows it just allows me to to take to say, okay, it's okay, yeah, that wasn't the expected outcome, but it's going to be fine. Take a break, come back. And over time, what that did for me was the most crucial impact of what that did for me and how it immediately affected my trading was this. So when I created that, I used to have this rule, and there's a statistic, guys. I just heard this. There's a statistic that so let me just finish the earlier point. I would have a stop out, and on those stop outs that affected me, I would revenge trade. I would be like, I'd either take the trade it didn't matter what trade I took, in the opposite direction from what I was doing, or in the same direction, I take it again. Either which way, that trade was being initiated from an emotional place, right? Not from a strategic place, and I needed some time to recognize that that was happening. And so that's why I created that stop loss protocol. It gave me some time to realize, hey, don't pull the trigger right now, because you're not pulling the trigger based on any type of evidence or any type of strategy. You are being competitive. you're upset about it, and that's what's initiating that trade. Okay, so there, it gives me the time to step away. It gives me the time to be human. It gives me the time to reassess. And the immediate impact was that I stopped revenge trading, um, and it took me a while to adhere to it, to stick to it. But I love it now, and I, you know, I've had stop loss protocols where I've just left for the day. I'm like, you know what, I'm done. That's it. It's over. I'm out, and I've left. So I've had some really good experiences with it. I suggest you all to try it. I use it with my coaching, with the guy, with the traders that I coach. So yeah, Anna says, but give yourself credit, Manny. Diluted focus when in a trade is a killer. It's hard when it doesn't go your way. Yeah, right, right. Actually, so interestingly enough, I was talking to someone else about that, and they were telling me, yeah, hey, listen, your focus, you're trying to trade, manage three different algorithms. Your point and click trades, your point and click trades, and then you're also trying to you're trying to manage your point and click trades. You're trying to manage your algorithms, and there's a lot going on. And so give yourself some space to allow that to happen. Um, so yeah, and interesting enough, guy. So listen, team, I was watching this interview of one of the, I won't go into it too much who it was. It's who it was irrelevant. More the data point is what's really relevant. And this person said he was a big prop firm owner, one of the biggest prop firms out there, and he said that there was a statistic that traders that took a losing trade would be back into a trade within 30 seconds of that loss. And that hit me. I was like, oh man, that's that rough place to be in, where you're revenge trading. So yeah, just know that that's out there. Make sure you have a plan for it. All right, we're getting some nice follow through on this short from 73.98. So pretty happy about that. Anna says, I know some traders say they don't do anything for the first 30 minutes of the open. What is your view on that? So Anna, I know a lot of traders that say the same thing. I know some traders that say they only trade the first 30 minutes. I can say that for me, I am a really shitty trader at the open. I'm really not good. So I'm typically only following, if I have a pre-planned setup, I'll take that. But my discretionary trades, what I call like dynamic real-time read trades, those are only happening in the afternoon. If I take anything in the morning, it's an ATA, it's a algorithm trade, or it's one of the trades that I pre-planned the night before. And then and there's a reason for that. I followed my statistics, and my statistics were showing me that my largest losses were coming in the first hour of the day. And so I remember looking at that statistic and thinking, gosh, if I just eliminated these, I'd give myself a raise. And so I stopped doing them. And so yeah, that's what worked out for me. If I take a trade early in the morning, it's going to be something that I have pre-planned out. I put up my trade plan every day on my X feed. If you want to go check it out, it's at Manny_trends. And just any trade plan is only as good as the person who's executing it. And then the second most important thing are the levels that are on that plan. And a lot of folks will tell you that frequently. Last week, my trade plan had the low of the day 3 days, and then one day it had the low of the day and the high of the day. So the levels are highly accuracy, tons of efficacy in those. If you want, you could go check them out at Manny_trends on X. And Sandeep points out, let's see, let me get back. Just want to get to this. Like the one you took late afternoon yesterday around 73.80, that was a good one. Yep. Yeah, that was a really good one. Thanks, Sandeep. Yep. We've had some, we hit some pretty good trades. They, not hubris, but, I've been, gosh, there's no humble way to say it, right? Yeah, so we'll just leave it there. Yeah, David points out bears are gaining some traction here. Ooh, looks like look at this. No, no, no. I'm going to take a dynamic exit on this if I don't because we are what time is it? Yep, we're going into that window right now. Yep, I have to lock something in on this. Let's just take a look at the structure. Let's not panic out. But when we just hit that level again, ah, late. I'm late. I'm late. I'm late. All right. Well, now we'll just let the OCO handle it, I guess. No, not going to panic out of it. I'm just going to let the OCO handle it. I again, I wasn't paying attention. Jesus Christ! Come on, Manny, get it together. Get it together, Manny. Yep. So out of that one there, not blue. I'm not having a great day, guys. That's to be honest with you. This is this has been a tough one. The distractions have been getting the better of me today. We hit down that level again, the level that's on the pre-market on the blueprint. So I'm going to stand aside here. So I'm not executing anything. I'm going to turn the algos down. I just want to take a breather here. This thing is moving pretty fast. I just had about 15 points in that trade, and it reversed on me. I saw there was 4 contracts traded at the low at my support zone, and I didn't close it because I was busy yapping. Yeah, that was a quick move for sure. That was a quick move. Yep. Yeah. Sure. And that's part of it, right? That's the part that nobody tells you when you get into this. Obviously, you sit down and you think you're going to be able to execute great trades all day long. Is there news out? Let me check the feed. Yeah, for sure, Anna. 100%. 100%. Gosh, look at how it hit that market blueprint level 73, 78. Oh, God. Oh, man. Why? Damn it. Yeah, it just happened to hit right at my level, too. Woo, it's smoking now. That is some move. That is some move. That is some move. Oh, wait, I have another setup up here. I do have a pre-planned setup up here. Let's see if it materializes. I do have a valid trade setup up here. What time is it though? It's 10:15. No, I'm gonna let this settle down. For those of you interested, there is a valid setup here on the market blueprint. I'm sure the continuation long setup. Setup number 3. So much for that. So much for me thinking that today wasn't going to be volatile. All right. All right. I'm in on this. No, no. Let me just chill. Let me hang out. I'm just going to stand fast here. Going to exercise some discipline and just hang out with you folks. Anna says, Manny, would you say that in Trump 2 presidency that trading had gotten way more dangerous? We're only ever a tweet away from violent reaction. Yes, 100%. Anna. And and interestingly enough, right at the beginning of his presidency, when he first came back, I was tracking. So I was tracking his, like, so every time he came out and said something, and I was in a trade, I tracked it for over the course of 7 trades for myself personally, and 5 of those trades I ended up taking a loss on when he was talking. So that just goes to show you. I think it is very highly volatile. There's a couple of different ways to skin the cat, though, right? What you can't, one thing you can do is trade micros, or you can just sit it out like I'm doing. That you don't, no one's holding a gun to your head saying that you have to trade. Obviously this is a business. We're here to make money, and we get to set the deck in our favor. Okay, so that's what we want to do. We want to make sure that conditions are right. I don't want to, and then everything that comes along with not executing well. I'd rather just, but yeah, I think that I think the volatility is is something really tough to deal with, because you could be right, especially for people trading at valuations and prop accounts like myself, right? You could be right and still get knocked out. I mean, that's not, you can be right and still get fail your account, or still, blow your account because you were just because of some intraday volatility. I mean, you have to stick to those rules. You have to follow that format, and that format dictates that you have tight constraints in terms of risk. When I'm trading my personal account, it's different. You can hold something for a while. I can hold a trade and even overnight. I can, I've been trapped in my personal account. I don't like to admit it, but there was one time that I got trapped in ES, and I was down over 65 points in my ES trade, and I stubbornly didn't close it, and it did come back, but I promised myself I would never do that again. This thing is really moving out very, very quickly here. Live Action says the thing that bothers me is when they release key info over the weekend. Yeah, that's by design. Live Action. That is definitely by design. You know, the funny thing, I watched a video yesterday, interestingly enough, on Trump trading, right? It was it's done, and it's hang on a second, Anna, and it was done by a popular YouTuber. You might have heard of him. Is what's his name? Oh man, CoffeeZilla. Yep, he's a guy who always uh, goes after scammers and stuff. And CoffeeZilla did a trading video on President Trump trading, and yeah, he nailed a couple of trades. But then there was this one trade, I think it was in MU, where he like bought the high and sold the low a few times. I thought that was pretty funny. I thought that was hilarious. Yeah, look at this thing. This thing just rocketed up to 74.23, pulled back 74.06. Guys, be careful if you're trading this. Just be careful. All right. I'm sidelined here. I want to wait for conditions to be in better alignment with. I want this to calm down a little bit. I do have a valid setup here. Let's see if we can reclaim 74.13 for a long trade that gets us up into and up over that gap. We'll see. See how it plays out. It is a valid trade for me. I do like the way we've pulled back here and like the structure here at the highs.
Hey Rev, any chance you can come on and give us a quick preview of the oil inventory report due out in a few minutes?
All right, gang, I'm in. Let's see. I'm trying the long here. We'll see what happens. Looking for 74.18 on the first.
Okay, there we go. I don't know if Fred could hear me. I was wondering if he could come on, give us a quick preview of the inventory report or
Looking
any
for
re
74.18 on the first, guys. Reverie, I'm not sure if you could hear. David was just asking to see if you could join us for an update on the inventory. That'd be great. Heads up. So I'm in the continuation long setup from the market blueprint. All right. This is really volatile, so going to definitely manage it dynamically. And if you're looking at the market blueprint, that is setup number 3. It's up on my X feed. It's a valid setup for me. Again, a pre-planned setup. Oh wait, yep. If we can't get up into this wick, I'm here. I'm going to close it out. I'm not willing to sit through a drawdown on this just because of the volatility. I can always re-enter. I want to see some quick follow through on it. And my oscillators are kind of petering out here. Things are moving fast, though. Things are moving fast, team. So stay alert. Looking for 74.18. Why is it 74.18? It should be 74.16 for the 5-point first. Oh, man. Again, another blown. Why is that a OCO? I should have been out at 74.16 on the first. Okay, thanks, Rev. Thanks. Thanks. No problem. Maybe tomorrow. All right, got that first target at 74.17. Looking for 10, 11 points on the second one. Looking for 11 points on the second one, guys. Wish me luck. It's not been a good day. Even though the Pinot is green, I just feel like it's been rocky. Just feel like it's been a rocky day, you know? But we persevere. We stick to the process, follow our trade plan. And, you know, this is a really good interest. Okay, got it. Got the fill. I got the fill on that second one, plus 11 points. Now, this is the added contract here. So it's got a higher average. It's got a higher average. It's looking for 74.28. I don't know. These I'm in a bad OCO here, but no worries. We're still gonna manage it well. Still gonna manage it well. Let's go. We're looking for 15 points on this contract. Let's see where we are. I think I can get it. 74.29.50 would be a 15-point gain. Let's see if I can get it. Let's go. So I got 6-7 points on the first, 11 points on the second. Petering out here. I'm willing to take a dynamic exit on this. Manage your trade accordingly. Come on, let's go. You know you want to fill me. I've been a good boy. I've been a good man. We need to get through these 27s here quickly. Testing them. Okay, we're up. It's 27.50, 27.25. We're 2 by 2 on 27.25. So we should trade through that at some point. It's an incomplete auction. 27.25. We should trade through that. Come on. Let's go. You should trade through that. Oh, 74.28.75. Heads up. We're running into trouble here. We're stalling out here. We're stalling out. We're stalling out. We're stalling out. We need to get through the 28.75s here fast because they're pounding those on the sell side. Okay, taking them back. We have delta div. Sorry, I know I'm saying a lot, but this is a failed auction up here. It's looking like a failed auction. I'm out. That's good for me. I don't know what I got on the last, but I'm willing to take an exit there. Really close to my target. I missed it by a few ticks. I think I got like 8 points on the added contract. It still might trade through. And the reason for the exit was the delta divergence, and they were pounding the bid, meaning that there were tons of sellers at 74.28, 74.27.75, 74.27.50. Got hit like 600 times inside of a second. Let's see if that gets absorbed. But I didn't want to, since I was only 7 or 8 points away from my entry, I'd rather just take the 7 points and walk away. You can see here we're fading. They're winning the battle. We're fading. They're winning the fight. All right, guys, heads up. Careful up here. Careful. Tighten up. Yep, the real-time read. Real-time order flow read right there for you guys. Yep. they were pounding 74.28. They were pounding them from 74.28, 74.27, 75, 74.27.50, 74.27 quarter, 74.27, all of that. They were just hitting them. And you could see that the buyers were there absorbing it. But then when it went 74.28, when it was 74.28 offered, 74.27, 75 bid, 74.28 wasn't getting hit. It only got hit like 25 times. So I mean, the although they were selling it and those buyers were absorbing it, nobody was coming in and lifting the offers on the other side. And what that tells me is that, hey, you know what? We're running out of buyers up here. Even though those sellers are being absorbed, they're winning the fight right here. They're winning the fight. And since then, we're pulling off 8 points from there. Not to say that that's the high of the day, 74.28, 75. That's not what I'm implying. What I'm saying is that my trade, I was looking for a 15-point fill. I was 3 ticks away. I'd rather just take and I don't know what I got on the exit. I'm hoping I got 8 points on it. I think I got 8 points on it. I was 3 ticks away from 15 points. But you just take what the market offers. You just take what the market offers. You move on to the next trade. That's all. Try not to get. I see we're fading here quite significantly. Let's go. Let me just go see. Let me just set up, change the risk parameters and some of the account stuff on this algorithm. I want to make sure that account is now really is done well. So I want to make sure that I lock that in. I won't be trading that account again today. Just nice gain there. No need to go back into that one. That's a great thing about trading props. You can have all these different accounts. You get green, you shift to a different account. You trade that one, you get green. You shift to a different account, so on and so forth. But I hope you guys are watching this in real time. We're 8 points. Anna says Trump coin springs to mind. Imagine. That's funny, Anna. Yeah. Thanks for joining me, Anna. I love the interaction. Thanks for keeping me company. Other than Liberation Day tariff, has been one-way directional bet upwards. He isn't allowing market to drop. I really believe that. Not a conspiracy nut, and especially with the midterms coming up. So yeah, I agreed, Anna. I agreed. Definitely, I don't think that's a conspiracy. It's been proven that he's trading. It's been proven that he's been trading. And so what do you think? You think, he's placing a Fed governor. Okay. So imagine, of course he's protecting his positions. Imagine you were trading ES futures and you could put out a tweet that would help your position. He'd be, of course it's not fair, but he'd be dumb not to. Especially that guy, that guy's like, I bet you that guy would get upset if he bet on 2 turtles crossing the street and he lost. He's uber competitive. Thanks, David. Appreciate the comment. Yeah, that was a nice fade up there. Good exit. Oh, look at this fading hard here, guys. I hope you're out. I hope you're out if you were in that long. The continuation long setup kind of ran its course. I would not be initiating long from up here. I'm going to kind of park it here now, and it was a rocky morning for me. And just in terms of mindset, listen, folks, I think, in my opinion, for me, the ultimate edge, our one edge is our mindset, right? It's the one thing that we can have on computers. Now, of course, we can't. There are certain things that we can't do that computers can. I'm not saying that. What I'm saying is that that's our true power, right? In our mindset, and we have to protect that. We have to be aware of it. We have to understand how to work with it, and we have to understand that that's our true power. Let's see if Bulls can get price back up there. Oops, wrong one. Sorry, excuse me. This is the wrong strategy. Let me just change this. I'm just loading up, changing the risk parameters here, shifting some things around. And it says he and his family are friends are effectively insider trading. Those tweets are strategically planned trading wise. Of course, absolutely, 100%. So, I mean, look, I'm, you know what? Let me just think about before I say that. Look, screw it. I will say it. Just give me. I'm going to use the bathroom. I'm going to tell you a real life true Trump story. Hang tight. You're not going to want to miss this. I'll be right back. All right, team. So I'm back. So real quick on, I was telling, I'm sure if those of you that don't know, Danny Riley is Danny Riley's original Mr. Top Step. He's the one that approached me about a year ago. Actually, it's exactly a year ago about building out Pitbull Traders. He's our CEO leader. I'm going to try to have him on more often. He's been a little preoccupied with some other things, but hoping to get him on here real soon. Our fearless leader, Danny Riley. One quick interesting story, and the reason why I was mentioning Danny is because I was telling him this story of not too long ago. So I worked on Wall Street for many many years. I think it was total was about I think 13 years, and so uh, I remember, seeing Trump often. He always rolled around with this big entourage. And he's really like this, larger than life figure, right? He's a tall guy. His hair in real life looks like a football helmet, um, and so I had a friend whose dad, uh, similar to my dad, emigrated to the U.S. in the '60s, and their family built up a hardworking family. They built up a strong legacy. At one point, he owned like 7 different supermarkets in one section of Spanish Harlem in New York City. And he was my basketball buddy. We used to shoot ball together and on Monday nights, and so I knew them really well. And so they had been working those 7 or 8 supermarkets for many many years, and they wanted to sell them. Okay, and so they sold the supermarkets. They exited, and they had quite a bit of money, and they didn't they wanted to invest in real estate. And without going into too much detail, they went into a development project with Trump as an investor, and he had many investors in this deal. They were just one of probably a pool of 50, 60 investors. I don't know how many they were. And I don't want to give out the particulars, but to put it, long story short, to get to the point, they invested in that deal, right, and put a large, like 70% of their exit from those, from that legacy they built over the course of 25 years, they put about 70% into that deal, which was not smart in hindsight, right? And to make a long story short, that deal ended up failing. And that was around that time he had claimed bankruptcy or something of that nature. They ended up losing their entire legacy in that deal. He went on to close the deal, finish the building, and exited with a huge profit. But fleeced, but all the investors on the first round lost all their investment. A 25-year family legacy destroyed. So yeah, it's always a bit for me, it's a bit um, it hits a spot. Sandeep asks, Manny, you take trades outside of regular RTH? For sure. Yes, Sandeep, I do trade outside of regular trading hours. I'm an early riser. I really like the overnight sessions, starting after the European market opens. So anything after Eastern Standard Time of 3 a.m., 4 a.m. I'm certainly mapping out. I have an idea of what I want to do, and only because I've done well in that session, I've had some really good trades, and there's nothing better than coming into the regular trading hour session having won the day already. We've had a nice trade. You're sitting in profit. Maybe you can risk a little bit of it, maybe not. Um, it works out really. I'm a big fan of it. But here, conversely, right, there are other traders like I know that David, doesn't touch it. He's not. So the question, I think the thing might want to ask yourself is, hey, does it work for me? Try it out. Try it out. I've had great success there. Anna says, that's awful. The film The Apprentice describes the three rules Roy Cohn told him that he practices today. Yeah, that guy Roy Cohn was a huge influence in younger, earlier Donald Trump, and the uh, yeah, that's yeah, it's kind of a weird subject for me, just because that was my dear friend, and they were never really right after that, you know. So unfortunately, my friend, it was his dad that built the legacy, right? And you know, after that, like so following that, about um following that occurrence, about 5 or 6 years, no, 4 or 5 4 I think 4 years later, his dad died. And his dad was the patriarch, really had done a lot for the family. um and sorry, it was just a really sad occasion, really sad thing, and the family was never right after that. They struggled with that, with losing. Think about it, right? You have you, you, you you have you think you have enough money that you can live off of your interest. I'm pretty. It was in the. I know that the exit was in the. Let's see. The exit was in the eight figures, double digit millions, and not 10. Higher than that. One denied, two attack, three claim victory when you're losing. Yep, that's good point, Anna. Good point. Yep, that's a lot of what we're seeing here. Yep, they attack, and just devoid of any type of compassion. I mean, I'm so let me not get political. Anyhow, so go moving back to the tape, folks. Let's cover. Let's get a real read on the ES here. Let's get a real. Try to get an idea for how how the afternoon trade may play out. All right. So going back to our 15-minute time frame, we can easily see here that we are now trading above yesterday's high. Okay, so on the hourly time frame, right? On the hourly time frame, this structure here is still very, very choppy, looking more like a pullback in time. That's on the left, but we are printing above yesterday's high and showing acceptance now above yesterday's high. We've had one 15-minute print close. This one is now consolidating. All right. We are showing acceptance. We are showing acceptance above the areas that we needed to. I'm just going back to my trade plan now. I'm going back to the market blueprint, trying to gain my thoughts to see how I would see if there's another trade set up for me here. Oh, snap. You know what I'm almost embarrassed to say it. Hey, folks, go to the market blueprint. I just want to show you guys. I just want to show the folks the power of this, the power of good analysis. All right. Let's look at the market blueprint today for today. Go to my X feed at Manny_trends. Okay. So we had the low of the day currently is 74.76. Setup number 2, long 73.78 to 73.82. That's a hit. Currently, our high is 74.28. Our first bearish setup, sell 74.28 to 74.32. All right. It's not hubris. I just want to point it out, the power of this plan, the power of good analysis. If you had to take in any one of these setups, I took setup number 3, and that's the one that paid, the one that I took live here. I executed that one. That's one of my favorite setups. Setup number 3, 74.13. When you combine this trade plan in combination with the execution clock, it's magic. Sorry. It's a really solid approach to the trading day. So if you don't want to know more about that, go to my X feed. It's on at Manny_trends. Whoa. Okay. It looks like this one's got me short now here. And I'm going to go ahead and I let that one execute. I know I did it. I'm going to, what time is it? It's 10:52. We're at low. We're going for the high now. I'm looking for a graceful exit on this guy, folks. I'm looking for a graceful exit on this. All right, I just took a graceful exit on that short. Just got out of it. Anna said, it's so interesting listening to your rationale when you're planning your technical level trades. How much are you influenced by A, macro view, B, stuff like NVIDIA reporting tonight? I so macro view is it macro view doesn't influence me trading in the day time frame. It's outside of what I do, and it just because I trade in the day time frame. If I hold that narrative too strongly in my mind, it can affect what's happening on a 15-minute time frame. So I try not to let that influence me at all. In fact, I don't want to know about it. Selective ignorance when it comes to that. And it's stuff like Nvidia. I'm thoroughly aware of earnings that are going on and stuff, and I want to know those things. And the reason I want to know that is because that's context of the market, right? We should all know. Not long ago it was Apple or whatever the hot stock is of the day. You want to know when that's going to report and how that might affect your positioning. Okay, so I'm not looking to hold a position through Nvidia earnings because I know that the risk involved with that type of volatility can knock me out of a position, can lead me to take an unnecessary loss. I think it's our responsibility as traders to know of those occurrences in the market. We have to know when, the Nvidia stock is reporting. We just have to. That keeps us right. It keeps us safe. If you're in a trade and and Nvidia is going to report, what do you need to know that to manage a trade. But I won't place a trade based on that information. I think it's useless to me. Over the years, I've boiled it down to three core components where I derive my levels from, and then I each night I do standard technical analysis, trend channels, Fibonacci's, moving averages, and then I have a program that calculates Fib clusters for me, and then as well as I look at flows. And when I have confluence in those three end up, especially when I have a Fib cluster, a flow level, and a hourly reference like a trend channel or a moving average. That's how I came up. That's how I got to 73.82. Everything was in alignment there. So it's about getting those confluence areas and finding those confluence areas and then trading them. And developing a way, a way to execute them. So, for instance, when I derive those levels, I plug them into an Excel sheet, and then I organize them, and I just look for matches. Right? If I have a match, if I have three levels that are matching, within a 5 or 6 point range, I'm just taking the mean. Right? I consider a hit on a level if it comes within 4 to 6 points. I think that's safe to say that's a hit, and then I draft a plan around it. How I want to execute if price gets there, and then I use that in conjunction with time. Right, I have the levels, and then I apply time to it. Internals to give me a read on what the market is doing and saying for the day. And that's it in a nutshell. It used to take me like 4 hours. Like I'd work on it all night, all day, sit at my desk for 3 or 4 hours. And then recently it takes me about 2 hours. I would say it takes me about 2 hours. And the reason why it's taken me 2 hours is mostly because I'm putting it out on social media. So I have to work on the presentation and so forth. Good question, though. Thanks, Anna. Adrian says, Manny, sorry to ask, but could you explain the difference between the 3 afternoon lows as outlined in today's intraday swings? Manny, sorry to ask, but can you explain the difference between the 3 afternoon lows. Oh, shit. Hey, Adrian, that's a good catch. So the 230 pivot is a high. You can see right below it, the time says high. And when the AI image generator put it in as a low, I should have checked that. Sorry about that. Let me see if yesterday's was the same. So, yep. Okay, that's why. The root document is, yep, the root document is wrong. My apologies. I didn't flag that. I did not flag that. So Adrian, heads up. We're looking for a high into 230. Follow the time frame just below the title. So it should be low, high, low, high, low. Does that make sense? Sorry about that. Let me just put out. Let me work on a quick correction here. All right, gang. All right, team. We're following the ES here. It's working its way. It's grinding higher. We are at a pivot. So heads up. Heads up here. How did that get? How did that get broken? How did that image get broken? Trump going to be speaking shortly. Oh boy, look out, team. Look out, team. All right. There's a nuance on S4L days. So I hate this. I'm going to go out on a limb here and say it, but there's a nuance about S4L days. I I don't know if I should say it. Because I hate calling tops and bottoms, right? But here, this pivot is a high, team. This 230 pivot is a high. So it's low, high, low, high. We saw the AM low. Now we are in the window for the AM high. Next, we'll be looking for a lunch low followed by an afternoon high into the last hour low. No, Delphine asks, Manny, today should be a down day according to the cycle day one. Not necessarily, Delphine. Not necessarily. What you get, I'm sure did David's post cover that before I go into it? I don't want to confuse it. David's the authority on cycle days, where I'm the authority on execution clock. But as I understand it, on cycle day one, what you're going to see is a strong decline. But that's relative to where the trend, to what the trend is. So maybe David can help me out with that. Let me see if I could ping David to see if he can lend some more.
Can you hear me?
Yes, I can. Thanks, David. Thanks for jumping on.
Great.
Maybe you
Yeah,
can
no
give.
problem. Yeah, I'll give a little quick overview, okay, for the 3-day cycle. So Delphine and anybody else that's interested, I posted up a link there on the 3-day cycle, which is uh, embedded in the PTG website. Um, so you're kind of half correct on that, Delphine, in terms of what the expectation is for a cycle day one. But let me just switch my screen here for a moment, and let me give you kind of a shorthand version of it. So the premise, everybody sees that cycle chart? That's my cycle chart with levels on it. So the premise of the 3-day cycle is to establish a low, typically on cycle day one, which is will establish a low from which to measure the next 2-day rally. So a total of 3 days. And so the idea of a cycle day one is to establish the low. Now, how that's established can take a few different forms, but in a perfect kind of scenario, perfect overview, you would be looking for a decline on a cycle day one. So, in George Taylor, who created the 3-day cycle, he actually referred to the cycles, labeled them a buy day, a sell day, and a sell short day. Now, for me, when I was learning about this years back, that somewhat confused me, and it probably confuses others today as they're if they're learning it from that perspective. So, like a buy day. Well, if cycle day one, and I just changed the labeling to cycle one, two, and three, all right, to make it a little bit more generic. But the idea is, if you're kind of thinking about it as a buy day, the confusion can come in and say, well, shouldn't I be buying it on a cycle day one? Well, yes, but the idea is the market is trying to establish a level from which to establish a long position, so a buy. It does not mean that you should be buying it throughout the entire day, okay? Because many times on a cycle day one, there's actually a lot of selling momentum that can occur. Are you following so far, everybody? So, in its an ideal form, you would get a decline on a cycle day one from which to establish a long. So that's where the buy day comes into the terminology. And then the next day, of course, we would anticipate a rally, some sort of a consolidation. That would be considered the sell day, and then a further push higher to fulfill targets, range targets, and that ends to concludes the cycle. And then the idea then is the cycle then kind of rolls back over, right? Um, and begins again all over again. All right. So if you take a look at my chart here for a moment, all right, let me just label them. Currently, we're on a cycle day one, but this red level, okay, was a prior cycle low. Okay, so we're on a cycle day one right now. Okay, and then this day here, okay, was a cycle day three, cycle day two, etc. Right? Okay, so that's really the basis of a cycle day one. But today, what happened yesterday? Let's kind of step it back for a moment. Yesterday, so yesterday, we established a high Okay, this was the cycle day 3 high. Okay, and that completed the prior cycle. So then throughout the day yesterday, okay, we ended up getting, a decline. So when you look at that document as you read it going forward, the conclusion of a cycle day 3 high, what can occur is the next decline beginning in the rotation. Okay, which if you take a look at it, according to the document, we would be looking for that type of action on a cycle day 1, but it can many times happen on a cycle day 3. Okay, so the cycle just kind of like, meanders a little bit back and forth, if you will. But the idea is it established the final cycle day 3 low was this low here. Now now we roll into cycle day 1. Okay, and so what happens on cycle day 1, right? During the Globex, right? We got a little initial pop, but then what did we get? We ended up getting a decline. Okay, so there is a decline that occurred on cycle day 1. To your point, right? Aren't we looking for a decline? And the decline occurred already, but it occurred during the Globex. And what it actually did here is it retested, right? So RT here for retested, retested the prior low, which was a successful test. Okay. So now, once that cycle day 1 low is in place, or it's potentially in place, it's not officially in place till the end of the day. But we can make a pretty good inference that the Globex overnight low is more likely going to be that cycle day 1 low, right? And a lot of times you have to make some inferences about the cycle. So, if coming in the morning, we're looking at, okay, what's unfolding, what may unfold for today? Well, what happened overnight? So we look at that and we say, okay, what happened overnight was a decline to retest prior low. Now, not even talking about the cycle, but what happened overnight. Okay, we retested the low. And that's just general observation. But then when you apply the cycle day 1 concept of it, okay, the decline actually for cycle day 1 happened during the overnight. And then what happened since then, the market has begun, its rally. Okay, so we're actually in, as we enter into, RTH session around here, we're in actually the rally off of a potential cycle day 1 low, which we're pretty confident that that's going to be the low. Does that make sense? Right. So yes, we are looking for a decline on a cycle day 1. Does not have to happen during RTH, right? And it may, begin to occur that decline sequence coming off of a cycle day 3 high. Again, it's a little bit more explained, with examples on that free document that's in that link. Okay. Again, an ideal cycle would be, cycle day 1, right? CD1, right? Establishes a low. Then we get a rally, right? CD2, okay, and maybe some backing and filling, and then another move to CD3, and then we hit targets. Okay, and then generally the sequence kind of rotates, again. All right. And if we have a series of, on the bigger picture, a series of higher highs, higher lows, okay, that's new cycle day 1 low certainly could be much, much higher, right, than the prior cycle day 1 low. Or if we're in more of a corrective sequence, okay, meaning a pullback on the general picture, that CD1 low could actually be, much lower on the next, sequence down. Right? But the pattern remains stable in terms of the cycle and how the dynamics of the cycle. And then one final aspect of the cycle that's quite important is, like, you'll see up here, this level here. So that's the next cycle target. Okay, the range target is up here at around 73.50s. Now, there's what's called the cycle statistic. And that statistic, what that means is price, right, is greater than, we're going to use kind of a mathematical formulation here, right? Price is greater than the cycle day one low, okay, on, right, cycle day 3. You follow that? Okay, that's what is referred to as the cycle statistic. All right, so price on cycle day 3 will be above the cycle day 1 low. And I have a statistic that I go back. Right now, that statistic is running 62, right, and a half, 62, 65% of the time. That's over 15 years. Okay, we've been tracking it. So what does that mean? So yesterday, right? Yesterday was cycle day 3, right? So if you saw cycle day 3 yesterday, we had a decline, right? So there's the CD3 high. We had a decline throughout the entire day. That red line that you see there is the cycle day 1 low, or prior cycle day 1 low. Okay. So notice at the end, again, when the market made its early low in the mornings, there would be a big question of whether or not the price is going to fulfill that type of statistic. In other words, will it get back to that cycle day 1 low? All right. And that was a big question mark, at the end of, going into yesterday's afternoon. But I've seen this many, many, many times that, the market kind of gets flushed out, and then the rally happens. So the rally happened back on cycle day 3, and notice what happened on this candle right here. It got back above the cycle day 1 low. All it had to do was trade back above it to fulfill the statistic. And what that statistic currently stands at 92.65% of the time, of all the cycles that I've been tracking, right? So one of the ways that we like to trade that, right, is when we're on a deep low and we have, a fairly decent distance to try to reclaim the cycle day 1 low. One of the ways we play it here, we like to play it, is, and again, you can choose how you want to do it, but we'll buy a 0 DTE call option, right, to try to play this move. So you kind of take a flyer, right, for the afternoon period, and that can, or a regular call option, maybe for the next day or two. But typically on a cycle day 3, when we have a deep low, we have, a fair amount of distance to return back to the cycle day 1 low. Well, what I'm doing is I'm betting on that 92.65 statistic, that price is going to be greater than the cycle day 1 low sometime, right, on cycle day 3. That's how we look at it. So a little bit long-winded, but I wanted to kind of give an overview of the 3-day cycle for everybody, to Delphine's question about, the cycle day 1 low. But a lot of that is really explained more on the in the document section. All right. So I hope that helps. I have a meeting I got to run into here in a few minutes, so we will catch you on the next next time. All right. Hope everybody had a good trading day. Thanks. Be sure to check out that document. It is free. Just sign into and again, you don't need to sign into the website or anything. So just go in and grab that document. Carry on, Manny. Thanks a lot.
Hey, David. No, thanks for that. Appreciate it. I always like to hear about the cycles. Refresher courses are awesome. So thanks for sharing that with us. Hey, all right, team. So we just got some news breakout, and I feel I just updated the Pitbull chat. I said, "Hey, the CCI is looking for a long here. I don't want to be long into a time based pivot. I cannot. I'm just having one of those days, right? Like, oh my god, I'm just getting it all wrong today. You can't make this stuff up. I mean, literally, I would have been long. So wait, the CCI would have had me long. Let me just give you the price, so you guys can, can you, so the team can laugh alongside of me. Let's see, where's that chart? Okay, nope, wrong chart, wrong chart. I have to get that chart up. I hope you guys are long. Let me know if you're long and you nailed this move. Come on, share it with us. Let us know. Give us some motivation. Share the chart. Share the entry. Yep, it happens a lot today. Live action. It's happening a lot today. But hey, I'd rather that happen than me. This is why I don't short high pivots. This is why I don't short high pivots and uptrends. I'd rather wait for the low pivots to buy them. All right, so look, this this one it would have had me long at 74.29. Just just a 30-point trade. Just a 30-point trade I took myself out of. No big deal. Right? No big deal. No big deal. What? No big deal. Friend blew out an account going to the bathroom. It's really live action. No way. Man, that was an expensive trip to the bathroom, huh? That's an expensive trip to the bathroom. Getting a pullback here a little bit stronger than let's see, what did we hit on the upside? This is just broad based though. You don't want to be selling this. I think we're going to chop around here for a bit. In fact, let's just look at the high up here. Let me see. Is that the high of the day? Is that a good candidate for the high of the day? Hard to say. Yeah, Bruce F says can't predict the Trump tweet bomb unless you're Trump or one of his friends. You can just picture his son like in his room taking heat in a position like, Dad, tweet something right now. I'm taking heat. I'm sure that's never happened. All right, I got a long here. 74.36. Looking for 74. I did get one scale out of it at 74.43. And my stops at break even. Yes, live action point. Let's see. Anna points out also FOMC minutes out at 2 p.m. Yeah, big. That's the big one for today, right? We're gonna get an idea. Bond markets are signaling that rate hike is should be at least discussed or enter the conversation. Um, Live action says I was already sitting in a long ES and short CL when the Trump bomb came out. Nice live action. Good for you, buddy. Sweet, sweet, sweet. Make sure you take some of those profits. Take something off the table. Ring the register. Yeah, never ever, right? Right, Turbo? Always good to have folks like David come on and join us. We have, as we continue to build out the show and the stream, just be prepared. We have some more stuff coming through very, very soon. I don't want to overpromise and underdeliver, so I'm just kind of keeping that under wraps for now. But been working with Danny Riley and the team in the back and in the background, trying to get some higher quality content out for you guys. So stay tuned and look out for that. I got stopped out of that long at break even. A pure ATA scalp. Trying to test this backup platform. Hang tight. Pretty good pullback. Oh Jesus. Why did this thing? Did he get it? Nope. It's not a trade I want to be in right now. All right. Graceful exit on that one. Graceful exit on that one. Just got to switch over to first. Where's that? Heads up, that's a really strong pullback. I never thought we would get that high. I lost the chart here. I'm trying to track down this chart. There it is. All right. Yep, this is the one I'm looking for. All right, team. It's 11:30. You know what time it is? It's lunchtime. It's lunchtime. All right, so we're wrapping it up for the morning, but the volatility is obviously not over. If you got anything out of this at all, please do me a favor. Hit the like button, hit the subscribe. Go check me out on X at Manny_trends. If you got the skill but lack the buying power to properly trade these moves, go to pitbulltraders.com. Let's see if you're ready to take that past that evaluation and come trade with us in the team. We're a little bit different than the most prop firms out there. We trade alongside you. We'll give you the tools in order to pass and stay funded. The idea is to not churn accounts. The idea is to get into a funded account and stay there for the long term. Consistent profitability is what we're after. Again, another shout out to one of our funded traders, Naeem, who's at Naeem underscore something. Sorry, I can't read it. He's using the market blueprint, so good stuff for that. Good on him. Yep, good stuff, Naeem. Thanks for checking in. If you got, as I said, if you got anything else out of this at all, please hit the like button. It helps a long way while we try to build our show out on YouTube and on social media. If you want to go deeper into any of this stuff, shoot me an email, manny@pitbulltraders.com. Remember, react, don't predict. We'll be back on later today in our private community. The party continues in the pit. For you folks checking in on YouTube, have a good day. Enjoy the rest of your afternoon. Trade well, trade safely. Have a good one. Thanks, Oz. Thanks for checking in. Thanks, Anna. Thanks, Live Action. Let's see. Thanks, Adrian. Thanks, Mo. Thanks, Tim. And all the others, if I missed you, thanks for checking in. We'll be back at it tomorrow. Again, we'll have we'll have the exit market, we'll have the market blueprint, we'll have the execution clock, we'll lay out the plan, and we'll follow it accordingly. If you guys just on a quick recap, if you guys were following the morning recap, we got the setup we were looking for, the most bullish outcome, although it didn't materialize until after the 10:30 hour. We did get that outcome where we pulled back to the overnight high, yesterday's high. It held the support, and then we raced off to the races. Obviously, if you took that setup, you're doing really, really well. Just a recap of that one. Let's see the. Yeah, so here's how we planned it out. It was this chart here on the right, on the left. The most bullish outcome is the one that played out, except that we got above the overnight high and then we rallied to the races. We frame out a plan every morning. We follow a logic chain. We take good trades that make sense. Good one, guys. See you tomorrow. Thanks, Anna. Have a good one.